next 2 days will be eventful for the markets, from tonight's presidential debate to September's jobs report. Of course, coming out first thing on Friday. We get a preview with our market panel right now. Springer Financial Advisors Keith Springer with me, along with Russell Investments Steve Wood and our own Mandy Drury. Good to see you all. Thank you so much for joining us. All right, let me get your take, Stephen. First up, on the jobs report on Friday, what should we expect?
I think it's going to come in lighter than the ADP. You know, the ADP has been a pretty poor indicator of the official jobs number, and I think there's a reason why the Federal Reserve gave us QE3 or QE perpetuity, is because they saw the softness in the labor market. So I think it could come in a little bit on the weak side, but also more importantly for the jobs number, the official one is the revisions backwards. So they've been going back through previous months and knocking down those numbers for the last couple of reports. So I think I wouldn't be surprised if it came in a little bit soft and there were backward revisions downward.
Keith, do you agree with that? And if so, is this priced into the market? I guess is even as important question.
Yeah, it's absolutely priced in, Maria. Great question. What they're going to expect right now is it to be terrible, and if it isn't terrible, we'll see a rally. What matters most to this market, I think, is earnings. We're in pre-earnings disappointment season, where we're going to sort of float a little bit until earnings start coming out. But we've seen a trend over the last couple of years where earnings have beat expectations. We've gone down 2 earnings beat expectations, and then we've had a good rally into earnings, and I don't see any difference. I think that's exactly what's going to happen again this quarter.
Mandy, after the employment numbers are done, we're focused on fundamentals in terms of earnings. What are we looking at?
You know, we're looking at many things. There are just so many things, obviously, in this quarter that could be either hurdles, challenges, things that could hinder us. But, you know, I really want to bring up something that we were looking at today on Street Signs, Maria, and that is, despite the fact that obviously the markets themselves look moderately positive at the close, oil took a huge big tumble, right? It was down about $4 a barrel today. And you have to ask yourself, what is going on here? Because as Steve a moment ago was saying, back on September the 13th, when QE3 or QE perpetuity was announced, you would have thought normally that should boost risk assets, right? Like commodities, like oil. And yet WTI futures have been down about 10%, maybe more, since September the 13th. And one guest we had on today said since we broke below 90, it was kind of like a psychological and technical level that opens us up more to the downside. And the fact that we're seeing oil drop like this is showing that there is a lot of concern out there about growth, not just about growth here in the United States, but growth in China, growth in the Eurozone, and where demand is going to come from.
All right, Stephen, one thing that we are expecting from these quarterly numbers is a contraction in earnings. They are expected to be negative for the third quarter, expected to bounce back in the fourth quarter. Are you expecting any big blow-ups? I mean, we saw Hewlett, we saw Federal Express, Norfolk Southern, Caterpillar. These large multinationals are disappointing. What's on the horizon?
You're right. We are definitely in a maturing earnings cycle right now. So I think earnings are going to come in line, and those inline expectations have been reduced dramatically. I think probably more importantly than the earnings may well be the top line revenue. So analysts in the street is going to get out a microscope. They're going to be looking at revenues, probably more importantly than earnings, to see what's happening there. But this is going to be a challenging environment, Mandy. Great point. China's deceleration is very significant. It's very real. You're seeing that in commodity complex. Her home country of Australia is getting represented there. So I think that revenue line is going to be very important, and that's probably going to come in soft.
All right, we'll leave it there. Thanks, everybody. Really appreciate your time tonight. We'll keep watching this market and all the fundamentals around it.